A major federal tax law took effect for the 2025 tax year, and honestly, most people still don't fully understand how it affects them. So let's break down the most important changes and who they actually apply to. First, a higher standard deduction. The standard deduction increased. For single filers is now $15,750 for $14,600 in 2024, and for married filing jointly is $31,500 from $29,200 in 2024. Most people take the standard deduction anyway because sometimes it can be higher than itemizing. But a big news or something really different that I think is significant is because there's a new senior deduction. And if you were born before January 2nd, 1961, then you can take an additional deduction for $6,000 if you're single and $12,000 in your married filing joint. But like every credit, it happens with every credit, every deduction, it phases out. So if you make over $75,000 as a single filer or over $150,000 as a joint filer, the deduction starts phasing out, which means reducing. And if you make above $175,000 as a single filer or $250,000 as a married filing joint, then you cannot take it at all. So if you make too much money and you're a senior, I'm sorry, you're not going to be able to take the additional $12,000 deduction. But, try to make a little less and then you can take it. Now let's talk about SALT deduction increase. So the good thing about the changes with the Big Beautiful Bill is that now it was increased from $10,000 to $40,000. So now most people are going to be able to deduct their state and local income taxes or the sales taxes, which you could deduct, but they were limited to $10,000. So now when you add the property taxes, the state taxes, the local taxes, you're gonna have a cap of $40,000, which is really good because that is gonna put you in the itemized deduction category. So if you were hating that old $10,000 limit and didn't know about this change, you might wanna look into amending your return. And then, remember we always talk about the phase out and how credits and deductions and benefits phase out. Again, for very high earners, there are limits. Most people making under $500,000 can take the full $40,000 deduction for the SALT, and then this rule will remain in effect for 2026. So that's a good one. Okay, another new one is the car loan interest deduction. This one is new. So if you bought a new car this year with a loan, and the final production of this vehicle was done in the United States, it's a domestic activity. I don't know if you remember that credit that was called domestic production activity. So this is just to stimulate or to reward the production in the United States. Now you might be able to deduct up to $10,000 of the interest you pay. And that was never the case in the past for individuals. If you own a business in the past, you were able to deduct the interest deduction. But this is for anybody who doesn't even own a business and you're able to take this deduction. So that's a really good one. There are income limits as everything. It starts phasing out at $100,000 for single filers and $200,000 for joint filers. And this deduction will be used or will be claimed by using the Schedule 1A, which is introduced for 2025 returns. Okay, let's talk about the tips deduction. There was a lot of confusion about this one because at the beginning when the bill was being promoted, they were saying that there were going to be no tax on tips. So despite what you might have heard, this is not a no tax on tips. It's a deduction, and it's a deduction with limits. You can deduct up to $25,000 in qualified tips, but only if your income is below $150,000 as a single filer or below $300,000 for married filing joint. Only the tips that are reported as taxable wages will qualify. So lower income workers may see limited benefit because they already don't owe much taxes. And remember, this is a deduction, it's not a no tax. Middle income tip workers are most likely to benefit from this. For this, as the same as the car interest, you need to use the Schedule 1A form to claim it. Let's talk about the overtime deduction. It's the same deal as we talk about the tips. This is not a no tax on overtime. It's a deduction for the premium portion of your overtime pay. So if you make $20 an hour and you get $30 for overtime, you can only deduct that extra 10. The maximum deduction is $12,500 for single filers and $25,000 for joint filers. And again, it has income limits like all deductions that phase out. It will also be claimed on the Schedule 1A. The child tax credit, it hasn't gone up in several years. So it went up slightly. The word slightly means a little bit, from $2,000 to $2,200 per child. Ooh, imagine that. A child is costing me $2,000 a year? Really? Now it's $2,200. It's not a huge increase, but if you have multiple kids, it adds up. Okay, another one that is not a good news. The clean vehicle credit expired. If you were thinking about buying an electric vehicle, those tax credits expire on September 30th of 2025. And in 2026, we're filing 2025. So if you bought before that date, you might still qualify. After that, most credits are no longer available. Something new on the bill is the baby investment account. This is interesting. If you had a baby in 2025, the government will provide a $1,000 contribution into a starter investment account for the child. So that means that you need to open that investment account, and then you will get $1,000 from the government, and then you put another $1,000 or whatever you want to put in it. If you do it, you can claim this by filing Form 4547 with your tax return. And finally, crypto. For the first time, platforms like Coinbase are reporting your transactions to the IRS. Remember, in the past, cryptocurrency was kind of a wild west because there was a question in the 1040 added that said, did you have any transaction with cryptocurrency? That was the only question before, you put the dependence on the 1040, but there was not a regulation per se. So now, if you sell or exchange or transfer crypto in 2025, you're going to get a Form 1099-DA to report those transactions. A lot more crypto activity is now visible to the IRS, which means audit risk goes up if you're not reporting correctly. So what does this mean for you as an individual? If you already filed your 2025 return and you missed any of these, especially the SALT, deduction, the senior deduction, the tips, the overtime, you might be able to amend and get money back. For 2026, these rules are still in place, but here's the thing, you need to be tracking this stuff from day one. Proper documentation matters more than ever. The tax code did not get simpler, it got more detailed. The reality is the tax law changes it always changes, and changes like this don't hurt people because they're irresponsible. They hurt people because they're complex. That's where professional guidance really makes a difference, And here at Global Group, this is what we do. We stay on top of every change, and we help our clients navigate them right away. So if you're unsure how any of this applies to your situation, let's talk. It's worth taking a closer look before another year passes and you miss out again. Call us today or schedule a consultation through our website, and I see you in the next video.